Cold again here in London. Good afternoon, everyone. Good morning, good evening, wherever you are. Hope you are well. Hope you can hear me loud and clear. Let me just check everything's functioning properly. It's usually the audio that's not functioning properly yet. Everything's fine. Video looks okay. So I say welcome. Some key data today, perhaps certainly not as important as we saw on Tuesday with the CPI, where it was in line and we didn't get a bit of a movement. We got PPI yesterday, a bit stickier, it was 3.3% compared to 2.7%. But again, the monthly numbers fairly bland and in line with expectations. So we are expecting. Let me see who's here. Good afternoon. We are expecting. We've got the weekly claims, continuing claims as well, which has been interesting. We've had this real strength, resilience in the weekly claims numbers. We've also got the two key manufacturing areas in the US. Certainly the indexes, the Empire State and the Philly Fed, both reporting today. Remember. Manufacturing in big of a slump, in contraction significantly, has been for a long time, in recession. The Trump administration talks about bringing jobs home to the US. This week he was down at Ford, wasn't he? A big manufacturer trying to bring jobs back there to Michigan, a key swing state for the with Trump with his politician hat on. Rather than Trump the businessman, that's not seen in the PMI data we've seen, or the hard data, some of the other sentiment data, some of the hard data, and some of the sentiment data. So that's what's to come economically wise. This is the I'm just bringing up different calendars today just to keep things spicy. Initial job claims got 3 stars here on the investing.com calendar. Empire State 0.8 from negative last month, and Philly Fed 12.9 last time. There's no prediction for that. Continuing claims 1.89 million, down from 1.9 million. So again, improving. Let's have a look at some export prices as well. But there's a whole raft of stuff coming through here. And then interesting, 2 key speeches today as well. One from Rafael Bostic, bit of a centrist, and then Vice Chair for Supervision, Michelle Barr. Remember, she was in the frame at one point. She as next Fed chair. That disappeared quite quickly, but she's discounted it herself as well. She says she got a full-time job with the supervision position. See if they've got anything to throw on the fire of where interest rates in the US are going for 2026. Lots of chatter around may already be done. Lots of chatter still. We've got a few to come, but not until June. Not until Chair Powell is no longer Chair Powell, but will he still be governor? Will he still be on the Fed? There's rising stories about that. It's unprecedented that a Fed chairman stays on the Fed once their tenure as chairmanship has ended. But, it's got quite personal. Led by the president, the attacks on Chair Powell. And then we had this indictment on Sunday, which spooked the markets, and it's still, rippling through the market. So whether any of them get pulled on that or called on that, we shall see. And then a speech there, you can see Barkin later on today as well. So plenty of things that could move the market. Some balance sheet numbers later on. Well, this is after the US markets have closed. Today, 21:30. That is my time. 21:30. This is GMT. So after the markets are closed, we get the Fed's balance sheet. So anyway, that's the calendar. We'll come back to that presently in a minute. Well, let's have a quick run through the positions at the moment. Not positions, but where the market is. So Bitcoin. I'm starting with Bitcoin today. Actually, let me. I just realised my head's still massive. Let's move down there. The screen of this chart looks bigger. That's what you're more interested in listening to me or looking at me. So the big breakout. This is the 4-hour chart on the Bitcoin, which I've added my position to. I haven't shared it with you. It's something else. But anyway, this is the 4-hour trend, and it's been very strong up once the breakout was confirmed. So continuing sideways action. I should take this with the daily time frame. This 92, 95 region was, we were in this big extended channel, broken above 92 a few times, but not followed through. Last time was a failed move here. Within 3 days, we were back down, but we didn't move much lower. Remember, we were talking about this last week, the fact we were still above the 20-day moving average, still in the upper half of the Bollinger Band on this strategy here. And we found a floor here at sort of 90,000. We needed to break 92,000. That happened on Tuesday. Follow through buying yesterday took us through 95,000. We got all a bit excited. We went to 97,800, I think, this last night, and we're down a tad today. So the key thing for me, long from 90, the break of or the confirmed wasn't actually on the confirmed break through 92,000. Is this holding 92,000 really as we go forward? So obviously next upside target, the psychological 100,000. And if I scroll these blue lines down, we put on these from last year, didn't we? So 107, 112 areas we've talked about before. So that's the upside target. If obviously the first line in the sand is that big fat round 100,000. If obviously we hold 92,000. So it's still bid here. The 4 hours still long. From this mean reverting strategy, it's sort of flattened out right on the cusp of in the overbought zone, like it did here. But now we're at a higher level. See, this is similar price action or pattern action, if you like, for the K and the D line, flattening in the overbought area, flattening in the overbought area. But that big news this week that strategy had bought significantly at the 85,000 level. That was made public this week, and that's obviously got other players on board. So we've moved through the key resistance area. Again, we could continue to go sideways and form a new channel. As long as it's above 95,000, that would be rather bullish for Bitcoin. Anyway, let's have a look elsewhere. Energies, oils come off quite significantly today with the announcement that Trump saying there's no immediate plans to a fire at Iran. Apparently, he's been told there was no deaths overnight. I can't believe that, but that's the phrase he used. And also the other key thing was this idea about no tariffs on some precious metals and some base metals coming into the US. That had been kicking around for a while. But the main move on the oil market has been the decline in the rhetoric around Tehran. However, having said all that, they're still moving people out of their embassies, the Brits and the US, out of Tehran as well. And he's also talked about, the son of the Shah, who's in the United States. He says he hasn't spoken to him. He doesn't know what sort of leader he is. He doesn't know what sort of support he has in Iran. This was quite an extensive interview that he did with Reuters as well yesterday, President Trump. So that's pulled as we've been saying for months, the weak oil price down. So we had this rally up this week on really the geopolitical things. So we might, when we look back at this, we might be able to say this, this is just a spike up of this continued decline with regard to the oversupply. Because obviously, if Iran comes on board, the government does fall, the regime falls. That will bring a lot more supply to the market, but demand is quite flat. If we're seeing, that's just more potential demand, because obviously they're part of OPEC's cap. Huge reserves in Iran as well. So, but that's all months away still. If all of that actually transpires, but we've got a bit over ourselves. Over $60 again, key handle $60 one day, not sure yesterday, and down again today. So looks like we might be heading back to 58. We're at 59.35 at the moment, but I think we got a bit ahead of ourselves potentially with the oil. But things can change very, very quickly. So just bear that in mind. So any long positions over the last week or so have probably been taken out either yesterday or today, and probably again people back to sitting on the hands under $60 for WTI. Exactly the same pattern on Brent, except we're talking about $64, not $60. We spiked higher yesterday to 67 range. Interesting, we had a positive day yesterday for Brent, but a negative day for WTI. So not to point, but anyway, normally very much in parallel move. Yesterday, indices were lower again. Yesterday, I think it's the fourth or fifth day. No, we were up on Monday, down Tuesday, down yesterday, down on Friday, weren't we? I'm looking. No, we were up on Friday. Anyway, 6,226 or 6,926. The S&P closed yesterday, down 0.53 of 1%. The Nasdaq lost a whole big fat 1%, and the Dow was really flat yesterday. So the indices, sorry, it's still got the oil market on there. The indices remain excuse me, relatively well bid. So we're back up today, though. All three indices are positive. So S&P is up, the Dow a green candle, less so than the other two, and the Nasdaq also up. We've had some the final two big investment banks in the high street banks, investment banks, doing both. Have reported earnings. I'll come to TSMC in a minute as well. That's really lifted Asian markets in AMSL in Europe this morning. So Goldman Sachs, Morgan Stanley, BlackRock, huge fund manager, all reporting better than above line expectations. Goldman Sachs earnings per share came in at $14 compared to 11.77. And again, revenues, a huge build, more than double. So sales and revenues from Goldman Sachs, more than double what was expected. However, because of the really high valuations we've had and high expectations we've got on the finance sector in particular, we saw that 4% decline for JP Morgan on Tuesday, which hasn't recovered from because we were down again yesterday. But despite these strong numbers, market's got a little bit ahead of itself. So froth being wiped off some of this finance sector. Morgan Stanley, similar pattern, not quite as 268 on the earnings per share, a better beat than the Goldman Sachs number, and nearly 30 billion of revenue compared to 17.25 billion of revenue. But I say they were very much ahead of themselves, and even BlackRock doing better, billing 7 billion in the fourth quarter of 2024. So that despite these strong numbers, even some of the smaller banks doing better as well. For First Horizon and Bank 7, they report after the market closes. Despite that, it has pulled on say the stock markets this week so far. Sorry, I'm just trying to get all those back in there. Pulled on the stock markets this week, so we're still sort of channel bound here. It's a bit messy this now, isn't it? Sorry, let's find a cleaner one. We're still sort of channel bound. Let me choose the cross on here. It's got lots of blobs on it, but never mind. You can see we're still sort of channel bound at this range here, but it's being quite choppy. But we are still, lacking direction. You see the red line here is the 20-day moving average. We've got this like wave action from the top we had in the beginning of November here for the Nasdaq, and we're sort of waving sideways. Big pull down, big recovery in December, and then we've sold off that second week and then finished the year quite strongly. And then we've dumped up. So it's another down leg, another up leg. So we're still really, so far the financials I'm saying being a mixed bag. But as far as the tech is concerned, we've had a big update today. I said just go back to TMSC. Remember what TMSC are? They're the biggest manufacturer based in Taiwan. They manufacture far too something like 90% of all the high tech chips for these bleeding edge data center centres coming out of Taiwan. So that's why it's such a delicate situation with regard to politics around there. But blistering numbers from and expectations going forward. So 2026 could be the year when lots of this starts to get implemented. Are companies actually doing this? All this fit out and of these data centers is the productivity gains starting to be seen? Are the investments starting to be put in around AI from normal companies, if you like? Which companies? It's obviously attracts across the board the impact of AI and how much sort of bottom line improvement can we see? So all of that to come. Anyway, I've been blethering on why the data. So I missed the data actually coming out. So let's just pop back to our calendar. Let's just bring up the euro as well as our default. Just put in euro, our default currency. So 16.13, 116.13. So we're down again today. Open a copy. Let's just make this one on the euro. So we're down again today. There's a line here at 116, which we're looking like we're heading back to, sitting with that fib level. So we've been up and we're going down in a step motion. There's also dollar still relatively on the front foot. Euro 116.36. Let's have a look at how we've reacted to the data. Weaker again. So let's have a look at what the calendar is showing us. So let's have a look. Let's just run through them all as a headlock. So Philly Fed manufacturing much better than expected. 12.6 minor indicator. 12.6. Initial job claims 198,000, back under 200,000 again. Really strong. Last week was ticked down as well from 207,000. Empire State better than expected as well. That we've got a very happy president. This again, along with the PPI and the CPI last week, these are pretty good numbers. Continuing claims also better than expected. I'll come back to the prices in a minute. So that's pretty positive. The first bit of positive data for a while from the US this week. So the CPI has been a bit benign. PPI was a bit benign, but it was a bit, I'm saying it wasn't as benign as the CPI data was. So and this is generally good data. So both the Philly Fed at 12.6 and the more important, I'd argue, Empire State at 7 has come in much better than expected. Remember, they were negative and declined last time. If I just bring in the other calendar, just get rid of. Let's bring in the. Where's it gone? We can see. Where's Philly Fed gone? If we just bring in Empire State here, we can see, negative is not a surprise for. We're just using Empire State as this is idea of US employment, manufacturing in contraction and in recession, but that's quite a tick up. But you can see there's as many negatives as there are positives. There's been a weak recovery. Obviously, this one data point isn't going to change the this trend really, which is rather negative, but it is positive. And these numbers can be quite volatile. If you look at the Philly Fed's even more volatile. You see the range is much wider on the Philly Fed, but last 3 months have been negative, and we're positive for January at the moment. But could flip back the other way quite quickly. Obviously, the government will say this is the start of the impact, start of Trump's second year, start of the big impact of tariffs coming through, benefiting US jobs. So again, we'll see how that moves forward. Where am I? I just need to get rid of that. Don't need that anymore. So hence dollar a bit firmer. So euro continuing to decline. Not quite interesting here on this 5 minute not quite into its oversold area, so we might see some more weakness. And again, obviously, it looks like 116 is calling. If we look at the other dollar crosses, USD, oh, excuse me, my nose is running. Sorry, embarrassing that. Oh dear, really me. I didn't even notice that. It's hideous cold weather in London. Excuse me. That'll make a meme if anybody wants to cook it up. So, anyway, down we go. Euro, dollar up. Dollar yen 159.75. Spiking higher. This is only the 5-minute chart, but again, moving up on that data dump. So I'll say across the board, positive data there out of all of the Philly Fed, the Empire State, and the jobs numbers, jobs remaining, continuing claims, and initial jobs looking really strong. 139 dollar spike tooth against the CAD. Again, it looks like a high for the day. Is that there's our high for the day? Let's have a look. Indeed, it is. So that's the 12th. There's the 14th, 13th last night. So we've been tracking high here, using the CAD as an example. So yeah, continuing to move to the upside. So dollar on the front foot again. 139's been breached against the Canadian loonie. 66.80, so back under .67 for the Aussie continues to decline. Again, it's the hourly chart, so we went to that this morning, and it's reversed immediately on the it's extended the reverse on the data, and under that 66.85 area zone we'd had on an intraday basis this morning. We're as low as 66.67. Will we get down to there? Next level is sort of about there, 66, 78, 75. And we can see, if we just go back to the 5-minute trading, shorting, there we go. We've been short there, target 1, target 2, but it's continued to decline, and it's looking a bit oversold in this short time frame. There's that pivot area there in the 5-minute. So there may be some tick up in the Aussie, but maybe not as well, because the higher time frames will still be moving lower quite significantly. There we are, still not crossed down the 15-minute, the 30-minute. Will be nicely short. There we are. Across there as it peaked at 67 this morning, 10:30, and it's been down almost. So nice rally up, roll over the top at 67. So you can see here 67 provided a support for a little bit earlier this week for the Aussie, but dollars on the front foot this week. You can see here, even against a strong Aussie, it's sort of banged into this 66.80 area we've called. So Aussie doing okay. Sterling 133.75. Earlier this morning we had much better than expected GDP numbers from the UK. Came in at, still pretty moribund at 0.3 of 1%, but it's much better. It was declined last time, and it was expected to come in at 0.1 of 1%, and it's come in. Let me show you the Forex factor calendar. Came in at sorry, it's a monthly one, isn't it? Sorry, it came in at 0.3 of 1%. So that's a significant turnaround in a month. We've gone from minus 0.1 of 1% to positive 0.3 of 1%. So a lot of that is to do with a factory that was shut down. The Land Rover factories have been back online last month, so that's pulled that up significantly. But it's quite a significant beat. And claims under 200,000. I didn't show you this one, did I? Claims under 200,000. So again, resilience in the weekly claims is, it's getting, quite strong. So this is showing strength, ironically, of the jobs market, or a full jobs market. So people that have got jobs are hanging on to them. Their earnings are doing quite well. It's difficult to find the right staff. Many companies are saying, but as an unemployed, semi-skilled person with the wrong skills, it's very, very difficult to get back into the jobs market. And Therefore, the people are not either not claiming, or the combination of that and the crackdown on immigrants in the US has obviously dimmed the jobs market, and we're into a different paradigm. Potentially, how long that goes on for, we'll see. But yeah, under 200,000. This is showing on the surface a relatively strong jobs market here. But we're realigning at lower levels, aren't we? If we look at the non-farm payroll data, sub 100,000. So we're in a different paradigm. But again, is that the combination of the impact of AI starting to take impact on productivity, the lack of manufacturing jobs coming back, because we see huge weaknesses in manufacturing jobs still. So, but the economy still looks okay in the US, still moving forward. So even chatter talking about raising rates rather than towards the end of 2026 and 2027, rather than this mantra from the president about cutting rates. So yeah, all to play for. But it's trade what you see, not what you think, as ever. As traders, as an investor, it's obviously different. I sometimes take an opposing view and just hang fire. But certainly here, using sterling as a cross on the dollar, the rally looks like it's over. We've rallied. Sorry, the rally it's big rally for sterling against the dollar is over, and we were questioning the decline of this pair earlier in the week after we'd spiked up, but we ran right into a key fib level of this last week's or the week before last, and last week's decline or strength of the dollar, and now we're continuing to make new lows. So currently at 133.78. If you look to the left here, you can see we haven't been trading here since that was in the Christmas week, the 22nd, 21st. And that Friday on the 18th, where we closed around about this level before we moved higher and then come back down. So we're back down to where we were pre-Christmas for sterling, 133.75. The other two, the Kiwi 57.30, also declining, but a bit more sideways action with the commodity, obviously the strength of the commodities we've seen this week. And the Swissy 80.25. So dollar has recovered 80 last week. It's held on to it this week, and we've moved higher again today, Thursday. So the rally back for the dollar against the Swiss franc. We're very much still in this channel, but breaking out the top of the channel at the 80, and you can see that the 81 is the top of the channel since August, but 80 has been a pivot area, and we've been playing getting over that. So again, that rally is still in place, looking a bit stretched now over 80. See how we go. Are we going to get back to test this next zone up here at 80.75, 80.50, 80.75 on the Swissy? But that uptick is still very much in play for the Swiss franc dollar combination. Gillian, I think companies have slowed down laying off their employees. Yes, that there seems to be that's certainly the jobs chatter. There's they talk about low hire, low fire. And that seems to be the case at the moment. So there's not many jobs around. There's not many new recruits being taken on, and there's not people getting sacked because they got caught out. Remember the massive layoffs that happened during the COVID crisis. They then found significant problems re-recruiting people or trying to recruit new people post-COVID as the economy expanded and the supply chains improved. So they've been very, very reluctant to do that. And I say it's all this massive capital investment by the big tech players and into the data centers, into the supporting of AI. What is the real productivity gains for the real bread and butter mom and pop businesses? We haven't really seen any of that yet. We're all doing it. We're all playing with ChatGPT. We're all playing with different ways of improving productivity, but we need to see that coming through before we see people being laid off, or all employees not getting laid off and getting either retrained or having to implement these policies as well. So time will tell. But having said that, we talked about big layoffs from was it not Goldman Sachs, one of the big banks announced it. I think it was forgotten to make a note of it. Was it Wells Fargo? I think or was it Citi? I think it might have been Citi actually. Talked about a big layoff. We've had layoffs obviously from the tech companies, reappointing from the Meta Group this week as well, sort of moving people away from the metaverse development. That's been sort of canned and moving into the the wearables. The glasses have done very well for Meta, so it's all that. But Sloths have laid off, and what else are you saying here? It's not an aggressive decline on sterling. Looks more like a pullback potentially. We'll see. We'll let's say we'll see. It all depends on your time frame. But here, that big rally we saw from the end of November to a week or so ago at the beginning of the year here to 135 all the way up here to the top of the Bollinger Band here, 135.50. That is over, and we're down, and we're now stuck on a sideways action, but this time we're under the 20-day moving average. We're in the lower half of the Bollinger Band. And here today, again, case in point here, Kelly, you can see we're touching the outside of the Bollinger Band for the first time. So with this strategy, that would suggest we're approaching oversold, but the trend is still very much down. So we could end up oversold for a long time, as I'm sure say here, this is oversold technically, but the trend was still going up and still strong. So this is a big, significant, quite a significant decline. And the K and the D line here, you can see on this strategy, is moving to the downside. So it's all about pays your money, takes your choice. But certainly the dollar is on the front foot today here against sterling, against the euro, and against most of it. So the crosses, the Aussie and the Kiwi are doing a bit better, the commodity currencies. And that is obviously to do with the big move we've seen in commodities. However, today, if we just go to metals, we've had this significant decline as we've seen for a while so far during the day here on the gold trade today. That's the daily candle. It's quite a significant decline. So we've not seen one since the 7th, and certainly not since the 29th big panic shakeout. But we also at the same breath new all-time highs yesterday. So if we come down the time frames, this is still a bid market. We're consolidating. You see here, this is consolidation at highs on the 4-hour time frame. Some substantial candles going sideways, and new all-time highs, as I've written here, are the panic about the indictment from Powell on Monday. The Iranian death toll sort of started at 250. It's now 2,500. But the decline today is from Trump's comments about no immediate plans for invasion or attacking, even though he'd said the day before, don't worry, protesters get on the streets. Well, he didn't actually say that, did he? The Charles Sumner was saying that. We are coming to help you. But he toned that down quite significantly for Trump yesterday. But, he swings and changes quite quickly. As I said earlier, there's still people in embassies in the UK and the US being taken out with Tehran. So see all that obviously pans out. But still, gold remains bid. We could easily, see new all-time highs as a further decline here. If you look at the daily time frame, it's a significant decline as it was a significant rise yesterday. But we did get to all-time high. So clearly some profit taken at this level and following the rhetoric from the president. So as you can see there, we're still nicely inside this channel here on the hourly chart. So sideways for gold today. Key pivot has obviously been at 4,600 level, and we're currently at 4,592 at the bottom end of the this full hourly channels, and the wicks have been taken as low. The low we've seen on the on Monday, it was 4,568 or 4,570 is the sort of low for the week for gold. But the high this week has obviously been the new all-time high up here just yesterday. So that still remains bid. But if you're trading it on a short-term basis, this morning it's been short, it's been long. and trade what you see, not what you think. As the decline this current hour, we've just gone down the time frames again, is all related to the US, or it's been exaggerated or extended because of the US data. But again, crossing this strategy would have looked to go short really there, or even that you might have been able to wait till that candle there, but that's been short since 12 o'clock here on the 15-minute time frame. Target 1's here, target 2's been hit, and now we're looking to go long if this turns on this 15-minute time frame. Again, it's all about time frames, my friends. The bigger decliner has also been this been the silver market as well today. Big again, follow quite a big decline this morning in Asia, but we've recovered all of that interesting silver, and then it's gone down on the stronger dollar. But this is very much a trend that's very much still intact. A relative significant down day today on the back of Trump's comments, but these are very, very dizzy heights. The silver market has got to 94. I think did we get to 94? Just shy of 94,000 this morning. But that's looking like a bit of a tweezer top. But don't be careful trying to short this. We might see a downside breakout on gold. The aggressive push to the upside has really slowed down. Well, yes. I mean, it's less aggressive in the silver market, but yes. I mean, just don't be. I mean, it can move quite quickly, as we saw there on the 29th. The thing about the 29th one, obviously, it's between Christmas and New Year here in the Northern Hemisphere, the Western Hemisphere. Volumes were low. Obviously, all the Asian markets were still open. But the fact that was bought at the bottom of this level here at the 4,330 level, and then we've gone to all-time highs. Things haven't, geopolitically, things haven't changed. Trump said yesterday in his interview with Reuters, he's pointing the finger at Zelensky, bizarrely, for the delay in any peace deal out of between Ukraine and Russia. Just unbelievable. But and his madness about taking over Greenland continues to divert attention from the real things in the world. But what can I say? People voted for him. You get what you vote for, I suppose. Be careful what you wish for. I'm just having a look. Yeah, I've said that regime collapse in Iran was the other, obviously the other big news item today, and he's not talking about that. So it looks like he might have toned things down for now, but things can change very, very quickly. A very, very bad night. Obviously it's Friday tomorrow. It's Friday prayers, which can sometimes be a catalyst for protest in Iran, and I say it's all around the country now. So watch that carefully as well. So this might be just a bit of a retrace, bit of a profit taking in these stronger uptrends. So yeah, downside breakout, maybe not on this time frame. But I say in these higher time frames of daily, it's still very, very well bid. The 4 hour is also still well bid, as I was saying, but sort of consolidating. It slipped under its 20 period moving average and down, but it needs to break down from here, like we saw on the crypto breaking out successfully for now at least. This needs to do the same thing as well, as we were saying yesterday, as we've been saying. As we always say, all our money is made here in the white part of the chart. Doesn't matter what's happened in the past. Just to an extent, but really you're making money here. Anybody can talk about what's already happened. It's what may happen next is where we make our money. Gold, that was gold. We looked at indices, didn't we? The Dow and the DAX. Yeah, so we're relatively well bid. We're still half an hour from the open, and so we've had a positive turnaround today or late last night before the close. So I say we were down, but these 4 hour candles, have bounced back up. It's back into the upper half of the Bollinger Band here, and we can see so far today. There's the low from last night. Today, so far, we are up and in the upper half of the Bollinger Band. So the hourly candles pushing higher, getting a bit stretched here potentially, but a bit more area to go. If you look at these previous highs, obviously it mightn't get as high as that, but relatively positive numbers. The data from the banks was positive, but hasn't. So we're having had a up day yesterday. Sorry, a down day yesterday. Down day on Tuesday from the 11-point gain we had on Monday. The weekly candle's still looking. Let's just do a flip. It's Thursday. The weekly candle is still. It's still looking negative, isn't it? Yeah. If I just. Sorry, it's because that's so big. Sorry. The weekly candle is still negative for the week so far. So, but yeah, I mean, the key thing to take from the week is that we've been to all-time highs again. And how many times we've been saying that over the last few weeks, not considered moving higher. So let's see how we finish tomorrow on that one. So if there's no more questions, my friends, I will wrap this one up. I've got lots to do the rest of the day. As far as potential trades tonight, I've got no open trades at the moment. We closed all the. We closed all the. Stay there. There we are. We closed all the yen trades yesterday. They reversed on us, but I explained that yesterday. We pulled our stop loss up nicely. We were we finished yesterday up 129.2 points. We were 373.95 up for the week. These are just forex trades. I've got no index trades at the moment, so these are points. So overall, up to 2% and a bit at the moment. We closed the euro pound. Euro pound was quite interesting. We had a just finish with this one. Again, I was saying yes, it's not one I trade very often. It doesn't trend very often, but it's been flipping around. So we were short this one. Sorry, we were long. Let's go to the date. Yeah, we were long this one on the close on the 13th, and then yesterday, ironically, it triggered short. And it's gone back against us again. So we're back to our entry, but we closed it before the stop loss this morning at I can't remember what. But anyway, we were down 14 points. We got out at we got filled this morning when we closed that at let's find the trade chart. There we are. We got out at 86.56 of 54 was the stop loss. We got out before that earlier today, but that is now yesterday. I'm saying it went short. Sorry, it went long. Get all mixed up. It triggered long yesterday on my system. It actually triggered short last night, but I'd left this long one because it's a daily one. I was seeing what happened. But as you can see, it's really sideways. I think I said on Tuesday when it triggered, it's not one I tend to trade. It's very much a sideways action. It's very much balancing candles. And now the balance from the early entry on Tuesday now seems to be back up. So we're 86.75 at the moment. So anyway, that was a losing trade. Obviously the prevailing trend is still very much to the downside. But are we starting to see a move up? But not. We're not. It's consolidating. So anyway, 11 points out the bag, 14 points out the bag. And at the moment, I've got no cash in the market. I've got no skin in the game, as we say at the moment. Potential trades for tonight. Let's have a look at let's do a quick scan. It's only one Aussie Swiss, but I think that stop loss will be a bit too tight on that one. Yeah, stop loss too tight. For a potential 40 pips for that doesn't look like that's going to trade. The more aggressive strategy be even less, I would have thought, or perhaps more that are kicking around. Mixed bag at the moment. Dollar CAD, pound CAD, potentially. Let's have a look at that pound CAD one. Used to be. I've exercised that demon. Used to be my real bogey one. Dollar CAD's also looking to perhaps go long, as we just saw there on. It's looking quite. Oh yeah, that's looking quite interesting on the daily time frame. Just go back to that one for your pound CAD. Is that a key resistance? I will use the CAD. there we are. So 1, 2, 3, 4, 5 days here. And this is a previous area we'd mentioned here. So 139 needs to hold. So this is looking like a potential long trade tonight on my trending platform. Bit split, stop loss about 30 odd pips, target about 30 odd pips. So that's, yeah, see what that finishes like. Still plenty of the day to go through, even though the big day is out. At the moment, the comments from the Fed members that are coming up. Remember, we had lots of chat that's due. Bostic and let's get rid of that. Bostic. Why aren't they on here? Is due. I've only got high impact ones. That's why. Only filter. Tuesday, Thursday. Yeah, Bostic and Barr, Michelle Barr, and Bostic's speaking now, or has spoken, probably still speaking. Michelle Barr in half an hour. So we'll have a look at that. May she move things, but yeah, dollar CAD potentially tonight, and the other one, there's a few other. It was pound CAD as well, wasn't it? Which is so used to be my. I've lanced that one in particular. Is that a long or a short? Doesn't look. So a quick check. Yeah, short that one. Interestingly, sterling. That's okay. Yeah, that's at the bottom again. That's at the bottom, and that's looking. That's more positive. I might take that before the day's out, actually. So pound CAD, that's looking more likely. Quite a big stop, but certainly 40, 80 pips in the bag there if we get that to this 20 there. So giving up some of this big uptick we had on the 5th. Yeah, lots of see the big wicks rejecting. Yeah, I might actually take that now. 80 at 86. See what we do with 8.86, 186 is a big fat round number in the moment, but yeah, that's looking much more likely. Pound CAD, Aussie Kiwi, AUD NZ. So that should be, I guess it's long. Yeah, that's looking like a long position. So that's looking quite likely as well. Aussie Kiwi and also Aussie Swiss will be the same as well. It's another one that's looking like it may be triggering for tonight. Aussie Swiss, similar pattern there. We are big and bolding candle again. That one might take that early, but that's looking quite positive as well. Aussie Swiss, Aussie. So they're looking quite good. Aussie Swiss, Aussie Kiwi, and pound CAD, possibly dollar CAD, possibly pound CAD on that. Those round numbers that are playing around. See what I'm saying? Okay. Anyway, well, I'll update you later on the Discord group. Do follow me there, or do follow us there on Discord, whether you've got an account with us or not. Obviously, you all should have an account with us. The support is first class, absolutely first class. The guys here, Toby and Christian, Katz and Thompson, they're virtually 24 hours a day, and we've got guys overnight as well that answer your questions overnight. So we're very proud of our support team. So general chat is for the what to do. Lots of offers on at the moment. So get over to the website. theproptrade.com, built for traders, powered by professionals, and I'm very happy to be associated with them, as you can see here. Okay, right, I'll see you tomorrow. I'm going to do an early start tomorrow. I'm going to trade the European Open. If you've seen some of our social media posts, we talked about trading the US Open. I've got something else on tomorrow afternoon. So I'm going to do the European Open tomorrow. So see you for that. Remember, we trade the DAX and the FTSE. And all the data of overnight is all getting priced into that. So we plot our pre-market highs, our pre-market lows, and see where we are, see where the bias is, and see if we can profit from it. Keep it simple. Get out when it's wrong. Let it run when you're right. Okay, keep that mantra in your head. Okay. All the best, my friends. Be safe, be good, and love to everyone. Be good. See you soon. Please. Killian saying, please share the Discord link. Killian, I'm not quite sure what you mean. This is Discord. Discord got Tom channels, and the one I put my data on here, Killian, is this one here. Discord channels, blah 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 blah. So if you're on our Discord group, just look for trading community and add the channel trade chat. If not, ask on the main plot. Where's the main plot gone? The general chat one is where most of the information is. I mean, there's loads of other, our promotions are here. There we are. There's that 26% announcements. What's going on? Our challenges. What's coming. We got MT5 coming soon. So, but the general chat is where like this guy here asking if Nigerians can true. Of course, Nigerians can true. Why not? Tried finding a Nigerian that can't see any. He's disappeared. But yeah, Discord obviously originally set for gamers, but very much here. So I don't know if you want. Do you want this Discord channel? Let me put it in there. Control C. I can put that. So everybody, that's our Discord channel. Well, you've got that, Killian. That's the that's the general one. Sorry, that's why I stick my end of day trades, my friend. Oops, it's that one there. Okay. Hope you've seen that. Thumbs up. Thumbs up. Anyway, hope to see you tomorrow, Killian. Thank you for your time, everyone. And I say I'll see you Friday early in the morning, or early in the morning my time. It might be in the afternoon, where if you're in Asia, and your weekend might have already started, so you might not be interested. But we're trading the DAX tomorrow. I'm off to do the weekly video now. So take care, be good, everyone, and see you tomorrow. All the best. Bye-bye.